Should we buy or sell this Nigeria ETF? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So the ETF is basically at the lows, 29-ish% away from the 52-week highs. So this ETF doesn't get a whole lot of attention. That can also be a benefit though. Obviously, it's been in a downtrend, but we have had some, substantial rallies throughout. If you take this rally as an example, all of a sudden you get, 80%. And you also get, substantial sell-offs. So the CTF also works very well in like a long-short portfolio. The current situation for this ETF is very dire because we do have a very substantial double bottom. So you have this low here and you have this low here. So yes, we do have a double bottom. The thing is that, double bottoms, they have worked out relatively recently. Let me draw that one in. So approximately around here and here, meaning this one, it was a bit double bottom-ish. Obviously, the bears are in control, but this is at least an opportunity here for the bulls. Obviously, if we were to lose this left end of that double bottom, that would be very bad. And that would, tell you to, be short. So here you have the daily data points, and we are below all the moving averages. So the situation is definitively very bearish. The issue for the bears is that shorting at this level is also, it's risky because we have seen before some pretty substantial rallies from these lows. So it's safer to short, the highs in the Nigeria ETF than to, short the lows. So here you have these other indicators. Looking at RSI, the previous time we had this weekly RSI was back here. It did lead to a bit of a bounce. So how big was that bounce? It was 14%. I mean, that is not, insignificant. Looking at the history of RSI here, more bigger picture, we have though seen substantially lower RSIs. So if we were to break, that left side of the double bottom, then we could see, those deeply like oversold levels that we have seen like back here in March of 2020. Looking at the daily data points, it's a very similar message. We have seen quite a few times that these lows form rallies. Also, the PPOs are at levels that usually result in some rally to the upside. But the caveat is that if we do get some panic in this ETF, then we have seen way lower levels. So I write double bottom. I give the bulls a 3 here on the technicals, simply because this ETF, it has a history of having some bounces, but quite a few times we have seen double bottoms also fail. So it's very cautiously optimistic. Here is the seasonality of the ETF, and in this case you see here that in blue here over the last 7 years, we usually see some rally into mid-September. In green here, over the last 5 years, it's a bit tricky to use this indicator, like that. We usually see some rally. And here to the left, we do see that from August to September and October, the seasonality gets substantially stronger. Looking big picture, the last 10 years, we do see that August is one of the weakest months, but September is, relatively speaking, a very good month for this ETF. Obviously, there's very few, columns here with high numbers. Highest here is for April, where it closes higher 70% of the time. But given the other columns here, you can see that September is actually a decent month. October is also a okay month, 0.7% on average. So I do think I give the bulls a 3 here on the seasonality as well. So let's look at the fundamentals. So now I am comparing the Nigeria ETF against the Africa ETF. So let's look at performance. Year to date, Nigeria is beating Africa. Looking at the beta, it's substantially lower, and that is, considered bullish. by those who are into fundamental analysis. PE 5.72 versus 10.11. That is substantially lower PE. Let's just quickly do the math on that, like that, and then we got this. It's a bit difficult to do in the head. Yeah, so the PE of the Africa ETF is 92% higher, and that is a very big difference in PE. Yield is 4.92% versus 3.69, so the yield is also much better. Looking at the holdings, 22 versus 84. Here's a cement company, mills, Nigeria, flour mills, United Banks, breweries, sugar refinery. Sector breakdown, yeah, market cap pretty balanced. So on the fundamentals, I do give the bulls a 7. There's a lot of interesting things here. You got very good yield, you got lower PE, you got substantially lower beta. I mean, there's interesting things here for those who are into fundamental analysis. So let's look at relative performance. So you do have 13% correlation negative, that is, with the S&P 500. You got 59% positive with the Africa ETF, minus 54% with gold, and minus 42% here with the dollar index. Short-term correlations is 51% S&P 500, 75 with the Africa ETF, 54% with gold, and minus 77 with the dollar index. So yeah, what happens with the AFK ETF is unsurprisingly going to have a pretty substantial effect on the Nigeria ETF. So yeah, let's just do a quick TA here. So yeah, it's a messy chart. We did have an inverse head and shoulders pattern developing like here, but it did not work out. It failed. If you look back here, you did actually have an inverse head and shoulders that worked out. So those who did buy that inverse head and shoulders back here, it wasn't like a silly thing to do, but whenever you put on a trade, you need to have a stop level. And in this case, yeah, we saw that the bears came back. Yeah, let's look at the daily data points here. Yeah, I mean, it's a very noisy chart. You could argue that there's some horizontal support here. Let's look at its other indicators. Yeah, it's a bit messy. There's just been a bit of a clear turf war between the bulls and the bears. Looking here at the upper end of RSI on the daily data points, the upper end is very easy to short. Quite a few times it's been quite a clear and swift rejection of that upper end. The lower end of RSI, it does occasionally trigger some rallies, but you also see here that it's not as tradable as the upper end is. Here is the Africa ETF against, well, let's flip it around like this. Okay. So here is the Nigeria ETF against the Africa ETF. So we have seen a very substantial downtrend. There is, however, something a bit rounding bottom-ish happening here, like this. It's not like a super bullish rounding bottom. I have certainly seen better, but it's a bit interesting. At least you see that ever since 11th of April, the bulls are fighting a bit aggressively, and there is a bit of let me just draw it in. Around this territory, there is some kind of floor being built. But it's obviously to be continued, but this is how lows can form. Let's look at the seasonality here. So in blue, over the last 7 years, Nigeria usually beats the Africa ETF into later September. In green here, over the last 5 years, let's do it like this then. Usually there's some outperformance here from Nigeria. Let's compare AFK against the S&P 500, which is the ultimate benchmark, like that, and like that. Yeah, obviously it's been in a downtrend. There's been some attempts to form double bottoms in the past that haven't worked out. And also here, let me just draw it in. You could have had a double bottom here and here, but it didn't happen. We went lower on the right hand of that yeah, bottom. So yeah, but it's not like a huge surprise to see that the S&P 500 has been outperforming the Africa ETF. And here's all here. The seasonality here is clearly bearish for Africa. I give the bulls here a 2 on relative performance, specifically for the Nigeria ETF. There's something interesting happening. Obviously, investing in Africa, it's a higher risk. Though investing in ETFs, I do think that's a good alternative, to sending money to charities. At least maybe in addition to sending money to charities, because you're then investing in actual companies. The issue with charities in Africa is that for one thing, they are very wasteful. And another thing is that very often they don't really have a long-term plan. They just put like band-aids on flesh wounds, and they have no focus on the deeper issues in the region. The best thing for Africa would be city planning, to basically have a more long-term plan for the different countries, the different regions when it comes to the number of people, the resources, stuff like that, because the conflicts in Africa, to a very large extent, has to do with very poor planning of those resources versus the people who live there and the different groups who live there. That is how most conflicts really in the world happen. Usually they are conflicts over resources and territory. So we do have some time left, so let's look at some of the stocks inside this ETF. So one of the first ones on the list here is Dangote Cement. Here is the chart. So what is interesting here, if you look here at this blue 100-week moving average, let me just draw that in, because it actually has been relevant in the past. So it can work, nicely as a support level, sometimes a long-term rally, sometimes just a bit of a bounce. It can also be a clear resistance level, as we have also seen. The point is, the blue 100-week moving average is obviously a big deal. The very fact that the biggest component of this ETF, Dangote Cement, is at support, that increases the probability that the ETF itself will form some kind of temporary low. Looking at the daily data points, the charts, the candlesticks looks a bit wonky, and that is because there are some severe liquidity issues. Here is Nestle, Nigeria. In this case, we do have a bit of a flip side, so let me just draw that in. We do have the blue 200, no, red 200 week, so red 200 week moving average. It's been a resistance level. Recently, we are testing it a bit as support here. Unfortunately, it is now a resistance level. So Dangote Cement is 14.51% of the ETF, while Nestle Nigeria is 8.46%. The third largest component here is actually Zenith Bank. So in this case, the red 200-week moving average is definitively a big deal. We are really slicing and dicing it. The bulls are able to get above it again, though. Looking here at the daily data points, you could argue that this looks somewhat like an inverse head. Let me just draw it a bit bigger, like a bit of an inverse head and shoulders pattern here. Potentially something that could play out in a bullish manner. When we look here at the history of this ETF, here you had an inverse head and shoulders pattern that played out bullish. Here as well, a bit of an inverse head and shoulders. So yeah, I mean, we have looked a bit deeply now at the Nigeria ETF, also the components within it. I think there's some interesting opportunities here. Overall, we do end up with a 3.8 here in favor of the bulls. The key entry signal stop loss is that the double bottom. If the double bottom were not to form, that would be bad. It simply would be bad. There's probably quite a few investors who are banking on that double bottom, and they will have stop levels that are somewhat below that right end of the double bottom, and automatically just put a sell order out there. So that is how signals can become self-reinforcing, and why it is very important that this double bottom actually plays itself out.